Hey everyone, welcome back to Accumulation Data Analysis for 19th of April. So it was quite a day today. We fell in the initial hours after trading began because of the news that Israel had attacked Iran, right? Because of which all the Asian indices were down, and even the Nifty had a fall close to 200 odd points. The mid cap index was down 2%, even the small cap index was down 1.5%, right? But then a big recovery came in wherein the Nifty actually went into the green. The mid caps, although they struggled, and the small caps almost ended flat. So we'll analyze the data, what the data is telling us, and how we should play in the coming sessions, right? So let's start with the Nifty analysis. So the large cap accumulation is still quite good. So if you look at it in yesterday's video, I talked about how the accumulation is very good and also the index is around support, and even today after the bounce back the accumulation is quite good compared to the last many days. It is like above average, right? So if you look at the chart here, the index is still in this parallel channel, although we kind of breached it intraday, but we did not close below that, and it's more of a piercing candlestick pattern that is formed, right, which is a bullish reversal pattern. So a piercing candle is formed, and we are likely to head higher from the current levels, and the closing was also quite strong. If you look at the candle, it is almost near the top, right? So very good closing for the Nifty after opening gap down and moving lower. In the second half we kind of recovered all of that and ended in the green with a uh, positive of almost 0.7% gains, right? So Nifty, combining that with the data, looks like it is going to move higher from the current levels, right? So you can see how the data kind of predicted that we are going to move up, or else if the data was weak with such news, chances were that we would have broken this and gone even lower, right? But since the data was very good and also we were at the support, even with such bad news we kind of ended higher. So such bad news are usually days of panics wherein retailers kind of exit their position and the big guys kind of come in and buy, right? Or all those weak hands, if it was like 10% of them, 15% of them, whoever is exiting, all that is kind of absorbed by the big guys and then they push the index higher. So once a retailer kind of sells it, the mental mind block would be there whether to buy it on the same day at a higher level. Usually retailers kind of miss out on rallies like this after selling, because they'll be like, I've sold it at a lower level, I'm not going to buy the same stock at a higher level, right? So that mental mind block would always kick in. So if you look at the bank Nifty, so even the bank Nifty almost touched the parallel channel at the bottom, right, before reversing, and here it has made a bullish engulfing kind of a pattern, which is a again a bullish reversal pattern. So looks like bank Nifty can move higher and it can test the upper end of the channel, right? So since the large cap accumulation is pretty good and even most of the banks, looks like bank Nifty should also do well along with the Nifty. The bank Nifty was almost up close to 1% today, right? It was kind of a main driver for the Nifty to end up almost 0.7%, right? Now looking at the mid cap analysis. So the mid caps, so the mid cap is actually quite a big universe, from a stock which is 101th ranking from based on its market cap up to 300, right? So you can have something as high as 80,000 crores or even higher, through all the way down to like 15,000 crores, which is still considered a mid cap, right? And usually, like I've told you, when there is panic, the most of the accumulation kind of comes into those wherein there's those are all large mid caps. So when I say large mid caps, like let's say 101st to let's say 150th ranking, so those are the ones that usually kind of attract the money, because those are uh, considered to be safe, right? They do not move much in case there is a panic or things like that. That is where most of the money kind of goes back once there is panic in the street, right? So the mid cap accumulation, although it has kind of cooled off, but it is mostly into those where which are larger mid caps, and that should do well. Although if you look at the index, because it has such a huge number of stocks, right, ranging from almost a lakh crore to almost 16,000 crores, the candle that was made is more like a hammer, which kind of tells you. So the wick at the bottom tells us that there was very strong buying that kind of kicked in, which kind of pushed the index higher. Although we kind of ended lower, that is 0.6% lower than the previous closing, but still the big wick at the bottom kind of suggests that we should move up. And also it kind of closed the gap that was there in here. If you look at the chart, right, so there was a gap which was kind of fulfilled today with this wick. So even the mid cap should do well. Although the data is kind of a little on the lower side, it might also be because what happens is, generally once we go into a weekend and with this war news and all of that, the big guys don't want to expose themselves and kind of have big positions, because they would want to see how it plays out, and on Monday they can all again rebuild that position and then move the stocks up, right? So even the from the chart and from the data, whatever we have seen, the mid cap index should also move higher from these levels. Now coming to the small cap analysis. So the small cap data is not that great. It has been continuously going down. So like I've told you, right, whenever there is kind of a panic, the money starts moving out. And also if you look at the small caps, so small caps are trading at a much richer valuation compared to the large caps. So in that case, and also there is quite a lot of bubble in most of these small cap stocks trading at 50, 60, 70 p. So in that case, money has already started moving out of these into the large caps and the mid caps, right? So if you are someone who kind of trades or invests in the small caps, make sure that the valuations are also reasonable, so that these are not in the bubble territory. If these are in the bubble territory, it makes sense to kind of book them and be on the sidelines, or move that money to large caps or larger mid caps, right? So if you look at the small cap index, like yesterday I told you, until and unless that 16,220 is breached, we need not worry. So although we breached it intraday, but we came back to end almost flat and above that level of 16,220. So until and unless that is not breached, we need not worry. Although the data is weak, we can continue being sideways or move up a little, but make sure to be in those where the accumulation is pretty strong. Now coming to the overall accumulation. So the overall accumulation kind of is a little on the lower side today, like I told you, being a Friday, and also the news that we are getting in. Usually the big guys don't like to take positions on a Friday and carry it to the next week, right? So net, look, it is positive for the markets, right? Although the data is slightly on the lower side, nothing to really worry. We should move higher from Monday, unless like a real war kind of happens and then even the US market falls. That would be a negative. Otherwise we should start moving up from these levels. So have a good weekend. I'll see you on Monday. Thank you.